Hi guys, good morning. This is a video on double entry accounting on debits and credits. And I mentioned in class that I think it's important that you watch this video and to help you with the homework that you have to do. The homework will be in the textbook, and I think it's going to come from chapter 3. So your homework is going to come from chapter 3. I think it's 3.1 till about 3.8, but we'll work on that later. I'll figure out exactly what that is, and I'll put that on Chai online. Right, so let's get straight into this. So what we're going to do now is we are going to sort of connect, if you like, connect the accounting relationship, the accounting equation, to this language we've been talking about so far. So, to the debits and credits. Right, so far, we have arrived, you probably can only watch this video if you were in class, when we arrived at D plus E plus A is equal to C plus L plus I. Right, where D is for drawings, E is for expense, A is for asset, C is for capital, L is for liability, and I is for income. Right, now you can see this is an equation. Yes, so let's get straight into it. And as you get straight into it, just keep practicing. It's a matter of practicing. Right, okay, so let me just change my color a little. Maybe let's go with the red. I guess that's working now. Not yet. 1 second. That doesn't matter. Okay, so the premise here is we did a couple of examples. So let's take the first example and we'll jump straight into the double entry, but let's take the first example that you're comfortable with. So a certain man, Harry, starts a business with £10,000, and we said what would happen is we would have £10,000 here, and that will be equal to £10,000. This is the accounting equation. So what's really happened here? This side of the equation, this right side of the equation has gone up by £10,000, and this left side of the equation has gone up. Now, the accounting language says that when anything on this side goes up, we debit it. When anything on this side goes up, these are just opposites really, we credit it. So when anything on this side of the equation goes up, we debit it. When anything on this side of the equation goes up, we credit it. Now I need to change my color because I need to get a different color. Okay, good. Now, the equation also says, of course, when anything on this side goes down, we credit it. And when anything on this side goes down, we debit it. Now, this doesn't mean you can't have something on this side going up and something on this side going down. You can have, two things happening on the same side. It's very possible you can have, in fact, even here, you could have two things happening on the same side. It's until you get onto the scenario that you'll see what that means. But the key point here is to go back and look at that and say this over and over to yourself, and then you practice them. Okay, so let's do an example. Yes, working with this simple situation that we've just looked at. Let's look at this 10,000 here. So we've just said that capital C has gone up, and when we say has gone up, it's gone from 0 to 10,000. That's what we mean. So straight away, what it means is that we credit capital 10,000. We always write the debits first. It doesn't matter. I'm just showing you what happens. And what's also happened here is that the asset of money on the left side, you can see in the bank, has gone up, and when anything on this side goes up, we debit that, and it's money in the bank that's gone up, and that's 10,000. I talked about the culture. We always leave a space between the debit and the credit, the next row, write the credit that way, and we always say what it is. We started with being the introduction of capital. Yes, that's the very first one that's happened. Yes. Okay, let's do another one. Yes. Okay, so again, let's just write that quickly. D plus E plus A is equal to C plus L plus I. I keep writing this because this is what you remember. You know this. Yes. So again, when anything on this side goes up, we debit it. When anything on this side goes up, we credit it. When anything on this side goes down, we credit it. When anything on this side goes down, we debit it. So let's take another simple example. We borrow some more money from the bank. Business gets more money from the bank. So what's happened here, if you like, is that money in the bank has gone up because of the money coming in, and also the liability has also gone up. So what happens here? We debit bank again, and then we credit the, if you like, the loan company or the people you borrowed the money from. Yes, I just call it the loan company, not bank, to show you they're two separate entities. You know, the bank we talk about, whenever you see bank, we mean the business bank account. Here we have loan company. So for example, say it was 20,000 that was borrowed, you would write it this way: 20,000, yes, being money borrowed from the bank. Yes, let's look at another one. Let's buy a car. Let's buy a car or truck worth 5,000. Yes. Again, I'll write the equation: D plus E plus A is equal to C plus L plus I. Well, what's happened here is that one asset has gone up because you have acquired a new truck. So you've gone from zero to the new truck, and also one asset's gone down, the asset of money. Yes, you're happy with that. I mean, we sort of, you know, we did that when we were playing with the equation. So if you like, it's like one A has gone up and one A has gone down. So, as we said, when anything on this side goes up, which is the asset of truck, well, we must debit truck. Yes, for 5,000. But then the asset of money has come down, so we must credit bank for 5,000. This is the language. Yes, and that's called, if you like, we'll say, being the acquisition, yes, of a new truck. Let's do another one. Yes, D plus E plus A is equal to C plus L plus I. Okay, let's take a nice simple example. We buy some goods that we're going to sell. Yes, so we buy some goods, we make some purchases of some goods, and we pay straight away from the bank. So what's happened here? You can pause this to think about it. So you didn't have any purchases before. Purchases are an expense. You know, say for example, you sell flowers. So what's happened here is that E has now gone up, but money in the bank has come down. Yes, because, you know, that's what keeps this equation balanced. You know, money has come down. One asset's come down, expenses have gone up. And we said when anything on this side goes up, we debit it. So what we do is we debit expenses, or the expense of purchases. Actually, it's purchases you should have written. Doesn't matter for now. Debit expense, debit purchase. And we credit bank because money has gone out of the bank. So for example, it was for 2,000. 2,000 being the purchase of, if you like, of goods. Yes, this was happened. Now, let's take another example where we buy some more goods. Yes, so we have again D plus E plus A is equal to C plus L plus I. But this time we buy some more goods, but this time we don't pay for them. We actually owe some sole trade payable. So what's happened here? For this equation to be balanced, well, you went from zero, well, you say for example you buy £5,000 worth, you go from 0 to 5,000, and you also go from 0 to 5,000. Now you have an expense and now you have a liability. So when anything on this side goes up, we debit purchases. You like the expense for purchases of 5,000, and we credit, yes, trade payables worth 5,000, being the purchase of goods on credit. What have I just done? This side has gone up by 5,000, but this side has also gone up by 5,000. You're still doing the accounting equation, but you're just recognizing it using the language. Yes? In the previous example, here, we had a situation where when we got the goods, we paid for them. So E went up, of course, because we got some goods, but we paid for them, and that's money coming out of the bank, so the asset of money was coming down. So expenses went up, but bank went down. And we agree that when anything on this side goes down, we credit it, and when anything on this side goes up, we debit it. Yes, it's just the language that we're learning. But this time, instead of buying the goods and paying directly for them, what happened was, when E went up, right, at the same time your liability also went up, because that's what the equation, to keep this equation balanced, that's how we know, that's the picture we have. Okay, good. Let's sell the goods. Yes, and this is where we start recognizing I. So let's start again. Oops, sorry. D plus E plus A is equal to C plus L plus I. So let's sell the goods for £10,000. Yes, if you remember, if we sell the goods, and let's just say we receive the money. Yes, and the money comes into the bank. So we have 10,000 here, coming in here. This is going from 0 to 10,000, but you also have 10,000 coming into the bank. So what does this mean? This has gone up, and this has also gone up. So what do we do? Well, we debit bank 10,000. We always write our debits first, by the way, and credit income 10,000, being, if you like, sale of goods and income received. Right, okay, let's look at the second situation where we actually sell the product, but we don't receive the money. So here we've debited bank, if you like, because we've received the money, and of course we've made a sale. Yes, let's look at that situation where we sell the product and don't receive the money. So let's write that out again. D plus E plus A is equal to C plus L plus I. So we sell the product this time. Let's say we sell some goods for 15,000, but we don't receive the money. Yes, the customer tells us that he will pay us later. If you remember, that's a trade receivable, and a trade receivable is an asset. So what we have here under assets, not money in the bank, but we have a trade receivable of £10,000, which is equal to, of course, income of £10,000. So the asset of trade receivable has gone up. So we debit trade. One second. Right, sorry, where were we? So we said we debit trade receivables, £10,000, and we credit sales, £10,000, being the sale of goods on credit. Yes, so you can compare both. You can compare, what's happened here. Same, you have debit bank, credit income, but in this scenario, it's not debit bank, but it's debit trade receivables and credit sales. Oh, sorry, sorry, let me just change that. We call it sales. Some people sales, income, revenue. It's all, if you like, recognizing that you have made a sale. Remember that the source document for something like this would be the till roll if you were selling for cash. Yes. Okay. Right. So let's do a few more. So we've played around with a couple of them. So let's start again. D plus E plus A is equal to C plus L plus I. Let's say there was some money in the bank. Let's say we had 50,000, for example, sitting in the bank, and we wanted to pay off the loan. Right. So if you wanted to pay off £10,000, for example, from the bank account, well, that the bank account would reduce by, say, £10,000, as would the loan that we were owing. That would also reduce by £10,000 to keep this equation balanced. We're playing, it's a logic game, playing with an equation. So what's happened here? Well, obviously, because this has come down, we credit this side, and because this has come down, we debit this side. We always start with our debits, so we debit the loan company with £10,000, and we credit the bank with £10,000. Yes. Another very important example, yes, that I think is important that you understand. I mean, it's just as I say, always playing with these. Yes. So for example, let's start again. D plus E plus A is equal to C plus L plus I. Say for example, there's some money in the bank, and they want to take money from the bank, if you like, to the office or to the till. So you're just transferring money from bank to the cash. Cash is also an asset. So all you really have is money going down in the bank, but money going up in the till, right? That's all that's really happening. So if that's the situation, you have money going up in the till, so it's debit cash, for example, say it was for £500, and credit bank for £500. Yes, being the transfer of money from bank to till. Yes, so you could do this all day. You could play with this, and you could really get to enjoy it, if you really if you work at it. But you need to keep on working on these examples. Yes, back to the key principles. Yes, key principles of this. D plus E plus A is equal to C plus L plus I. When anything on this side goes up, and when I say goes up, it increases. For example, it wasn't there before, now it's there. That's what we mean by going up. That's what we mean by an increase. Yes, we debit it. When anything on this side goes up, so what I mean by that is, for example, there was no capital there before. Capital has gone from when anything on the credit side here goes up, sorry, anything on the right side goes up, we credit it. Yes, and when anything, if you like, on the left side here, when anything here goes down, so for example, when I say debt goes down, money leaves the bank. That's typically the key thing. Or money leaves the till. For now, there are a couple of other situations when overall E goes down, but we can talk about that later. But those are the key things when money's you'd have to be crediting things here. But typically, you either you buy some goods, where E is typically usually going up. Yes, or money's coming into the bank from people who are paying you. Yes, let's do a very quick one. Say for example, you receive money from a trade receivable. So for example, let's quickly do a D plus E plus A is equal to C plus L plus I. Yes, and you sold some goods on credit to a customer. So you sold some goods worth £10,000 to a customer, and there's a trade receivable of £10,000. You had debited trade receivables, £10,000, and credited income of £10,000 because this had gone up and this had also gone up. Yes, anything on this side goes up, we debit. Anything on this side goes up, we credit. The trade receivable now pays you a week later. So because he pays you, what you now have is that this asset of trade receivable now goes down. You lose it, it goes. Yes, this goes down, but you now have money in the bank because this asset of trade receivable, this note, goes away when he pays you. Yes. So what we now recognize is we now, if you like, recognize that bank has gone up by 10,000, and if you like, we now credit 10,000 to trade receivables. And you can see how this comes to mean. Well, let me put credit trade receivables. You can see that this debit here, and this credit here in the same account, because that's what's really it. You can see they're opposing each other. It means this is sort of cleared now, but we'll come to that. But the key point is what I need you to do for now is to be able to play with debits and credits and write out using this idea that, just writing this out finally, that D plus E plus A is equal to C plus L plus I, and when anything on this side goes up, we debit it, and when anything on this side goes up, we credit it. When anything on this side goes down, okay, so I'll put it up here, and anything on this side goes down, we credit it, and when anything on this side goes down, we debit it. Yes? Okay, good luck. I'm going to try online, and now you should be able to key in and do the homework that you'll see right at the top there. Work through those exercises. Have a good bash. And now you can do all the online exercises as well. There's 4 of them. All right, good luck. See you on Monday.